Hello friends, this is 3 a.m. Europe and this is an update. No, this is an urgent update on how the situation at the financial markets are developing at the moment. Because having observed and analyzed how things have gone from bad to worse during the past couple of weeks, I feel once again compelled to do a clip like this. Now I want to state for the record at the beginning that I don't like to speak about this topic. I would rather talk about any other topic, but I need people to understand where we are headed. Because it was first in July that we reported about the financial crisis in China and how it would impact the European markets and the US economy, and this is what we have seen. In September, we reported about the Federal Reserve's decision on raising or not raising interest rates and the setting up of a new world economical system and how it is about to be established. And so the past couple of weeks have been fascinating and what's been occurring on the financial markets, and I don't even know where to start. Several big monetary organizations have raised their voices for what current monetary policy has not achieved. For instance, the IMF, the International Monetary Fund, argues in The Telegraph that governments and central banks risk tipping the world into a fresh financial crisis. The International Monetary Fund has warned, as it called time on a corporate debt binge on the developing world. Emerging markets companies have overborrowed by $3 trillion in the last decades, reflecting a quadrupling of private sectors between 2004 and 2014, found the IMF's Global Financial Stability Report. This dangerous over-leveraging now threatens to unleash a wave of defaults that would imperil an already weak global economy, said the IMF report. But the problem with this is that the IMF does not bring up the US debt, which is about $18 trillion or something like that, compared to the emerging markets, only $3 trillion. But IMF is not the only one that is giving the warning signs. The Bank of England, the United Nations, the BIS, the Bank of International Settlement, are all echoing the call to please wake up. In The Guardian, we read in an article that the IMF's warning echoes a chorus of others. The Bank of England's chief economist, Andy Haldane, has argued that the world is entering the latest episode of a three-part crisis trilogy. Now, that's a fascinating illustration, because those of us who have watched movies know that it is the last episode or the last movie that is the greatest and the most exciting. And according to him, we have now entered the last episode of the crash. The first was in 2008, the second was in 2011, 2012, and now we are entering the last final crisis. Fascinating illustration. The article continues and says that in UNCTAD, the UN's Trade and Development arm, would like to see advanced economies boost public spending to offset the downturn in emerging economies. The Bank for International Settlement believes interest rates have been too low for too long. This is something we reported this year in July, and encourages too much risk-taking in financial markets. All of them fear that the global financial system is primed for a crisis. Now, this is fascinating because also Citigroup's William Boyter even said that the chances of a global recession in 2016 are growing. And he said that this is going to be because of the global growth is likely to put the global economy back into recession. So perhaps next year, he says, we are entering into the last final phase of the crisis, a recession, and who knows, may even be a depression. But in order for this to happen, something needs to trigger the crisis, just as the last crisis was triggered when the Lehman Brothers crashed. Therefore, it is extremely important to follow and keep an eye on the banking system, especially on certain banks, such as Deutsche Bank in Germany, because the news came out not that long ago that they lost more than $6 billion for the third quarter in 2015. And in order to try to solve and to do something about the problem, they said they are going to need to remove more than 23,000 jobs. In other words, they need to fire approximately a quarter of the bank's staff. And the question is Deutsche Bank the new Lehman? For instance, in May, one of Deutsche Bank's CEOs, Anshui Jain, was given an enormous amount of new authority by the board of directors. And this usually happens when you know that you are going to hit a crisis. And last year in June the 9th, the S&P had lowered the rating of Deutsche Bank to BBB+, just 3 notches above junk. Incidentally, BBB+ is even lower than Lehman's downgrade, which preceded its collapse by just 3 months. Also, over the period of 3 months, $11 trillion of global shares were wiped out. I mean, we are talking about big, big money. We could also go into Glencore. We could also go into Walmart and how Walmart's stocks are literally falling as we can see it. We have never seen Walmart stocks fall since 2008 when Lehman Brothers collapsed. And what is even more incredible is the fact that the 5 largest purchasers of US Treasuries, China, Russia, Norway, Brazil, and Taiwan, are all dumping US Treasuries, and what we are seeing is the fastest rate on record. We also see that China is also buying gold, and so has Russia. And you remember our previous clip where we said that Russia and China has decided to dump the dollar and come together to challenge the authority of the United States of America. And this is what we are seeing also. When you see US Treasuries being dumped, you need to take a look at what is taking place here. Now, according to HSBC, we are already in a recession because of 3 factors. They argue that global growth is decelerating. For instance, global trade is down 8.4% so far this year. Second reason why we are in a global recession is the absence of policy put. There seems to be no policies from central banks. We're coming to that soon. And reason number 3 is that risk premia offers a limited buffer. And so they are arguing, after having mentioned growth expectations, consumer data, the global PMI, manufacturing data, and so on, that said, if our leading indicators are correct, we are unlikely to see a stabilization of global growth numbers over the coming 3 to 6 months. And this could even be more. This preamble, global asset markets with a significant growth problem at the time of fairly limited risk premia in US equity markets, for example. What they are basically saying is that central banks have lost all their credibility, but still central banks are filling the markets with cheap money, which brings us to our last point in this clip, which is something we already mentioned in July, that the BIS warns of low interest rates. We reported in September about the Fed's decision, and it becomes more clearer for me that the Federal Reserve will not raise interest rates this year either, because they know that would directly lead to a crash, simply because it would impact the American economy badly. And we could also talk about the world, the emerging markets, and so on and so on. But the other alternative, QE, or quantitative easing, the printing of cheap money, filling the markets with imaginary amount of money, is not a better alternative. You know, it may boost the economy for a period of time, but nothing has been created and nothing has been produced. And this kind of strategy works for some time, but this is only short-term solutions for, which is actually long-term global problems. It is like pouring gasoline on fire in an attempt to quench the fire. If the central banks and the Federal Reserve Bank really believe that the interest rates can be held at 0 level and you can just print money, cheap money, and hoping for the best, well, they are obviously making a big mistake. I personally believe, though I may be wrong, but I don't expect the Federal Reserve to raise interest rates, but continue on with QE4, because this is the only option they have. Either the markets are collapsing now, or we prolong the collapse, but the more we do it, and the longer we are doing it, the worse it will become. And what is fascinating, though, is that if you research the French Revolution and what occurred around the time, there were social problems and there were religious issues, but so there were financial issues as well. And these financial issues included, what do you think? Quantitative easing. Of course, they did not call it quantitative easing, but the principle and the method and what the French were doing is what we would call today quantitative easing. France had a huge debt, the economy was going bad, and they needed to do something. And so they launched the French QE. And after some couple of years, you had a financial crash which simultaneously went together with the rise of the French Revolution. I am wondering to myself, when the crash will come, will there be something similar of what happened, this turmoil of the French Revolution? Will it become not local, not national, but global? And so basically, I don't understand why we are keep repeating the same mistakes the people before us committed, and they so miserably failed. I don't know what it is, wishful thinking, that maybe this time we will succeed and it will be different, but wishful thinking is not enough in reality. These people who are doing this are either completely deceived in their own Keynesian economic model and theory, which I hope, or they know exactly what they are doing, and they should be held accountable for that. We have already mentioned in previous clips that this crisis ahead of us may be the one. We don't know, but this may be the one that catapults the world into a new world economic system where cash has been abolished. As Haldane said in an article, central banks should explore the use of state-issued digital currencies similar to the Bitcoin virtual currencies. Now, whether this is an indicator to the emergence of a world currency, the future will reveal it. However, what has been revealed, though, is that all of these events shows us that we are being witnesses of the final construction of the Big Brother society that George Orwell predicted not that long ago, and it is growing and growing as never before. Not only Orwell predicted this, for more than 2,000 years ago, the Bible in the book of Revelation foretold us that a new world order would be erected where our rights to worship and to freely exercise our God-given rights, such as expression of thoughts and ideas, would be taken away as totalitarianism and tyranny would develop. I believe the final pieces and the final events for this implementation of the mark of the beast foretold in the book of Revelation chapter 13 can come together, and it will. In a society, we are going to experience that if you are not following what the government and what the church will tell you, you will become, economically speaking, a marked man or a marked woman. You will not be able to buy or sell. But the saddest thing of all is not this construction of a Big Brother society, but it is the fact that many of us are sleeping, not realizing what is ahead of us. I am not saying that this crash and this implementation will happen tomorrow. Who knows? You see, many were disappointed that nothing, quote unquote, happened in September. That some even wrote to me. Well, first of all, if you listen to some of the clips that we have posted on Facebook, you will realize that I never said that an economic crash would happen in September 2015. But secondly, if you understand and if you have studied other crashes and collapses in the financial markets, you will see that the crash does not come in a day, but it's a longer period of time. It's a process that is being built up in a momentum. And as you understand that, you will keep your eyes open and you realize that, you know, there will be days when the markets go up and there will be days when the markets go down, but you need to see the longer period of time here, and you will definitely see the times as we are living in, as we have presented the articles to you. You see, Jesus said in Luke 21 verse 28 that when these things begin to come to pass, the things that the Bible has foretold, then look up, and lift up your head, for your redemption draweth nigh. Our redemption, the second coming of Jesus, is approaching with the speed of light. And the question is, what or who will you invest in? Gold, silver, dollar, or pound? These things will not save us when the day of the Lord comes, but only Jesus Christ. I want to suggest to you, make the real investment, Jesus Christ, your investment today. Without the coming of Jesus, there is no hope. Make Jesus your Savior. Take that step today towards Him. And as we are entering the final events of Bible prophecy, where our rights to express our ideas and our rights to worship will be taken away. But He is the one that is going to lead us. There are so many examples in the Bible where God protected His people. And He is going to protect us as we are entering us towards this society, which reminds us a lot of the dark ages. But Jesus is telling you, make that investment, make that real eternal investment into God's kingdom. And my question to you is, will this be your decision? The choice is yours. And remember, if you are watching this, you are part of the resistance. Thank you for watching.